Alright, what's up, guys? So only got 2 trades today. So first one here, you can see the executions here. This was a 2-to-1 risk to reward. So what we have here, you can see this blue line right here. This is by the way, 1 minute chart. We got NASDAQ over here on the right, and we got ES, S&P over here on the left. I always trade NASDAQ, and I just use ES as to look for divergence. So anyway, pay attention to this blue line right here. I'm going to jump over to the 15-minute time frame now. So this is right here is where we were just looking, except on the 1 minute time frame. So you can see right here where this high of this 15-minute candle got run out. You can see it easier over here on ES. But just because it runs out that previous 15-minute candle high does not mean that you want to short and take a reversal, because I bet a lot of these candles right here probably ran out that previous candle high and might have dipped back down. I don't know. I haven't gone back there and looked at them, but to get a really high probability reversal trade, what you want to see is something like this. See this blue line? This is a major high right over here. You see it hit there and it closed below it. So as soon as you see something like that, you're going to, this one closed above it, but it's not, all you want to see is it take that high and then take the 15-minute candle high and then reverse. Okay, so this is the framework for your trade. You always want to start framework on a higher time frame. Otherwise, you're going to get chopped up on the 1 minute. So once you see that high get taken and close below, you did here. We take this previous 15-minute candle high and then we slam down right here. Just like if you watched any of my other videos, this is the same shit that I do every time. Or not every time. I got a bazillion different ways to get into these, but this is a very easy way. Come up, take liquidity, come back down. We close right here at the open of this candle. As soon as you see that, you take it short, stop goes above this swing high, and we aim for the 50%. You'll see sometimes that I try to go 3/4 of the way down, but that normally whenever I want to see that, I want to see some divergence, and we didn't get divergence here, so I got out full in a 2-to-1 risk to reward. Yeah, that's great for what I'm trying to do. So you can see if this was different, or if you wanted to do this differently. If you have a different way of trading this, you can see that, if you wanted to take a partial here and then, move your stop down to either break even or even, a little bit ahead of half of this imbalance right here, maybe move it down to about right here. You could have picked it up through and taken this entire range out. But you see how it reacts off the bottom here? Help ES, S&P over here to the tick hits the bottom of this. But anyway, that's just however you want to do it. The way I did it was in full, out full, and that's how I normally do it. You can do it however the hell you want to, but this is the trade, entry, exit. Pretty good trade. So this is the second one today that I saw. I didn't have time to go through the entire chart today, but while I was sitting at my desk today, I did see this, but I was done this morning, so I didn't even take this one. So this is 15-minute chart, NASDAQ right, S&P left. Okay, so the candle we're going to be looking at is this 2:45. This is all Central Standard Time. So this 2:45 candle right here is the one we're going to be executing inside of on the 1 minute time frame. So you see, a lot of times before, or all the other times before, I'm putting my fib retracement on the previous 15-minute candle. Well, whenever you have an inside bar, that means the high and the low of this candle are both inside the high and the low of the previous candle. So these are both inside bars. So you got to put it on the candle that encompasses this one, because this one right here, it's going to be reaching for this one up here is where the liquidity is going to be. You know, there's this little spot right here. It's kind of be a dead spot in there, and you don't want to be fucking around in there. That's a good way to get chopped up. So that's why the fib is back 1 bar. Alright, so let's drop down to your 1 minute. Okay, so here you can see also clearly over here, just like the last one, we have this swing high on the 15-minute, swing high on the 15-minute with the blue line. So we come back over here, you see it, we take it. This one just barely takes it. So you can see why we didn't consider a continuation here to maybe reach for these highs. Because you can see where this one, it hit this swing high over here and got rejected. So you don't want to be taking, you know, see how this one closed above it? If this one closed above it, then I might have considered going with a continuation, but it did not. So whenever you see that, I'm thinking immediately reversal. So what we have here, a little liquidity pool, you can call it supply or supply and demand, support, resistance, you know, whatever the hell you want to call it. It doesn't matter. This little gap right here, fair value gap, inverse fair value gap, whatever. Either way, it works. So you want to close below that on this time frame. So we get that here on this 1450 candle. But if you drop your little handy dandy tool here, so your stop goes above, right there, above that candle's high, the one that created this gap, right there. And we are aiming for down in here. So right there, if you wanted a 1.7, you could take it right there. I probably would have. I would have taken it right there. I normally look for 1.5s and ups are great for me. Hell, I can make it work with a 1-to-1 because my win rate is high enough that a 1-to-1 is good for me. But you know, if you have a 40-50% win rate, a 1-to-1 obviously isn't going to work for you. So if you wanted to demand a higher, you know, you could, whenever this candle started, you can see it traded all the way up to here. So if you really wanted to, hell, you could have gotten almost, you know, a 3.7 risk to reward if you tried to top tick it up here. But, you know, you're not always going to get that. So, you know, let's just say you took it right there at 1.7. Anyways, we start trading down. And you can see we didn't quite make it to this take profit. But if you've watched any of my other videos, this is why I only trade NASDAQ, but this is why I keep S&P, the ES, over here. What does this do? Hits that 50% and wicks up right here. At that point, as soon as that hits that 50% mark, even if you think this might keep going, well, you can do it however the hell you want to. Whenever you start going through these charts, if you find something that works for you, do it. Because what I do probably may not work for you. Probably isn't going to work for you because everybody's mind works differently. Trading is a mind game. That's it. You know, it's not some secret, super duper, Reaper fair value gap thing like a lot of people try to teach you. There's some, you know, super duper secret thing out there that only some people know. It's money management, and it's in the mind. So what works for me in my mind might not work for you. I like scalping. A lot of people would probably shit down both legs trying to scalp. So, it is what it is. But I digress there a little bit. Anyway, the way I do this, as soon as one of these indices hits that 50%, I'm out. So NASDAQ was right around down here when ES hit 50%. So I was out about right, or I would have been if I was actually in this trade, which I was not. I would have been out about right there, which is about a 1.4, which is fine for me. So anyway, again, I didn't take this trade, but it was I sat there and watched it. And it's a pretty good trade. Anyways, just 2 for today, so that's the last one. Thank you all for watching.